It's that time of year again, people, when investors clutch their seats and Tesla enthusiasts hold their breath to see how many svelte, avant-garde Teslas will touch the road this quarter. The twist is that it goes beyond autos. It's about how you can accelerate your financial aspirations and boost your portfolio using those autos. We're delving into the fascinating world of Tesla's Q3 deliveries and their heart-pounding impact on the constantly evolving stock market today as we dive deep into innovation and finance. Get comfortable, as we are going to take you on an exhilarating adventure filled with figures and a hint of drama around the stock market. But there's still more. Exclusive interviews with financial geniuses, market analysts, and Tesla insiders who will reveal all the details are scheduled. Will there be a cha-cha of obstacles or a tango of triumph during the stock dance? Will revenue numbers quietly park in the garage or explode through the roof? The analysis, the insights, and the rush of adrenaline are all here. However, before we go any further, please remember to hit the like and subscribe buttons. Introducing Tesla Stock News, where we will be bringing you this video. Having said that, let's get on with the video. Tesla's Shanghai plant has been in the news for its remarkable July delivery total of over 64,000 vehicles. This spike may be related to ongoing renovations at the Shanghai plant. Let's now dissect it in detail. The production and deliveries for this quarter could prove to be quite the spectacle. As you are undoubtedly aware, I have a strong interest in Tesla and have followed the rise and fall of the company's shares. Let's talk about Tesla Shanghai, the superpower. They achieved an amazing 64,285 deliveries in July, but if there hadn't been any upgrades in effect, that figure might have increased much more, perhaps approaching 70,000. Don't worry though, those upgrades are a part of the larger scheme that will support Tesla and its shareholders' long-term profits. As everyone knows, Tesla is all on long-term cars, and the new Highland location for Model 3 production means that the improvements are really noteworthy. Turning now to August, I believe that the renovations will be well underway. I will remain conservative and say it's 7 days, but they may decide to go longer. This might have an impact on the 2,500 cars that are currently produced every day. When we compute that for August, we're talking about a good 60,000 cars being made. September keeps up the momentum, producing a staggering 75,000 automobiles on a daily basis. Let's head over to Fremont now. They set up 51,000 cars in July, deducting the Independence Day holiday. Due to possible modifications, August is trimmed by 7 days, resulting in a production forecast of around 41,000 automobiles. September continues its consistent pattern, with slightly more than 49,000 cars arriving. Over the course of these 3 months, 141,000 units have been produced. Berlin is taking center stage right now. In July, 25,000 cars were produced at an 800 per day rate. I'm crossing my fingers for a weekly surge of 6,000 automobiles in August. Remember, by the time this video is released, this may have been verified. Snipped from August by 7 days, we're looking at about 20,000 cars. September keeps things consistent with 27,000 cars. Berlin has contributed an astounding 72,000 automobiles in all. Now, let's change directions and go to Austin, where there is a noticeable buzz. Independence Day fell on July 1st, with 750 vehicles produced each day, or approximately 22,500 vehicles overall. August is a very different story. With all factories getting improvements, I'm taking precautions. After deducting 7 days from August 31st, there will be 24 days remaining, or more than 19,000 automobiles. But September is when I think the real magic will happen. With 1 day off during Labor Day weekend, I aim to have Austin produce 6,000 vehicles every week, or around 25,000 vehicles. Let the countdown begin. Austin is the city that produces the most cars, having created almost 66,000 in total. I think that's quite the accomplishment. It's time to add up the figures for a major disclosure now. With July excluded, Shanghai produces over 415,000 cars total. Adding Shanghai, though, might bring that closer to 480,000. However, we'll set that aside for the time being while we wait for more precise numbers. After analyzing the data, we find that there were 393,918 automobiles delivered with a 95% delivery rate. Now that Shanghai's July deliveries are taken into account, we're easily surpassing 458,000. Although I did mention 466,000 on Twitter, we were a little taken aback upon double-checking. That's still impressive, though, especially with the enhancements taking center stage. Take a gander at those inventory charts to see how intense the demand is. It is anticipated that a higher average selling price together with a few other variables are driving up gross earnings from vehicles, leasing, and services. Let's now discuss auto revenue alone, that is, without credits or profits. Energy, with an estimated $1.9 billion, is also a topic of interest. Even while the proportion stays at 18%, it might increase to 19% in Q3. With a steady $450 million, operational expenses, taxes, interest, and other specifics are still in play. Imagine the following scenario. Those millions of money are growing discreetly, and Tesla is seizing the chance to grow. Credits that number of shares comes to around $450 million. Now for the juicy Q3 specifics. This is the prediction. 458,223 automobiles are being supplied. That's quite a figure, huh? Examine the greater picture. Due to the upgrades temporarily affecting the leverage, the total vehicle revenue may be slightly lower than Q2. We anticipate that these improvements will soon ignite the engines in production, producing cars at breakneck speed. Looking behind the financial hood now, the revenue is skyrocketing to around $25.5 billion, and the gross margin for the quarter held consistent at 18.2%. But wait, with a non-GAAP of $3.3 billion and a GAAP of $2.9 billion, the net income is also no little accomplishment. Strong financials suggest a sound bottom line. When it comes to EPS, the non-GAAP number of 96 cents looks fine. Wall Street is speculating about the low 70s, but as more information becomes available, we may see that figure rise. The performance of Q2 is expected to be surpassed, but the overall EPS is slightly down, which might weigh on the stock price. In relation to the stock price, it is presently trading at about $250, with a PE of 71. Applying the same PE ratio to Q3 would result in a decline to about $241, which might draw in some astute investors searching for deals. There may be some market panic when the Q3 figures are released. Tesla's market share may cause some people to worry, which could result in stock price declines. With a PE of 60, the price might potentially fall to $220, and with a PE of 55, it might even approach the bottom 200s. But hang on, things could get better if interest rate decreases and general optimism boost market sentiment. The stock might surge to a PE of 80 or 90, perhaps even $300. Let's keep things grounded for now. Playing it down the center with a PE of 75 looks like a safe bet. It's a conservative road to follow. Directing our attention to Q4, as that's perhaps the big show. We're looking at a staggering 525,000 automobiles being delivered if Q3 upgrades take effect. Hey, don't be shocked if that figure starts to approach 540,000 or even 550,000. The idea is that Q4 might be revolutionary. Our target vehicle gross margin is 18.3%, which is in line with the strong Q1 results. Don't miss the spectacular conclusion, which consists of an astounding $2.5 billion in total energy sales and $525 million in energy profits. I'm not sure what could be more stunning than that. Let's go on to Q4's major unveiling. Get ready because there's a chance that this quarter will blow everyone away. Total income. It's making a somewhat grand entry, knocking on the door of $30 billion. Profit margin. With a GAAP of $3.7 billion and a non-GAAP of $4.1 billion, it is expected to end the year strongly. How about a triumphant conclusion? That EPS too. It is approaching $1.19, the non-GAAP threshold. Let's face it, this is a bullish move if the fiscal year EPS is expected to be roughly $3.40. Imagine that the stock price is hovering at $340 and the PE ratio is in the range of 90 to 100. Let's stay grounded for the moment. A PE of 80 sounds like a reasonable wager. As we say farewell to 2023, let's talk about the reasonable pricing ranges now. A prospective stock price of $270 to $330 per share is what we're considering. Regarding the overall number of vehicles delivered this year, we're almost at the 1 million mark. 9 million threshold, or even exceeding it, but for now, let's exercise caution. A commendable 42% rise occurred in 2023 compared to 2022, even with the renovations and the changing economic conditions. And that concludes our discussion for today. Please consider giving this video a thumbs up and subscribing to Tesla Stock News in order to see more like it. We appreciate your time, and we'll see you in the upcoming video.